The dollar is the dollar has been sat at quite a strong level of structure for the past couple of weeks now, or past 1 to 2 weeks. And it's just between the 100 and the 101 level, really. So after we've had the Fed cuts, which obviously came out at 50 basis points, which was quite aggressive, but we'll go into that a little bit more in a minute. I am looking for this level to get broken, and when we do see this level broken, it should theoretically be quite a nice melt to the downside, really. So something along these lines. Obviously, we do have some small levels here, but the long-term target I have is sort of the 88 to the $90 level on the DXY. Oh, thank you, A1 guys, for putting the password again. Gold will drop. Yes, gold has a chance of dropping. Now, there's not much reason for gold to drop in terms of the market drivers behind it, and the reason is because we've got global tensions. Things in Russia, Ukraine are still ongoing. We still have the Middle East problems. We've just had news that I think it was in I can't remember where it was actually. There was the what are they called? Those things, the pages. That's it. The pages are exploded essentially. They injured and killed quite a few people. So that's obviously an aggressive move, because it seems like it was planned from everything I've seen. It was like an intentional act. So tensions in the Middle East are continuing is the point. We also have the US elections coming up as well. So essentially gold still a very, very good asset to look to buy. However, what we also need to pay attention to is profit taking. So we've had the rate cuts. Gold's essentially at all-time highs, give or take. So yeah, a profit-taking dip isn't out of the question right now. Now, I'm not saying we will get it. It's just one of those things that you need to be aware of and you need to definitely pay attention to. So if I'm looking to buy gold, which I am, I need to see this 2.5% drop. So I would need to see this drop back down to the previous level of resistance, retest, and then potentially move to the upside. Basically exactly what we had here, where we broke out of resistance, broke out of new all-time highs, and then came back down to retest and then continued up. So that's the plan. Whether we'll get that, don't know. We'll see. How the UK can't see what's going to happen is insanity. They should have cut at least 25 today. Yeah, well, doesn't matter what they should have done. They haven't. So time to capitalize on that decision. Leading on to, I don't have it here actually. Pound dollar is a very, very strong setup now. Obviously, the Bank of England held rates, whereas the Fed has cut. So this is kind of a no-brainer in terms of rate differentials. But we are stuck at this level of resistance. So I would really like to see some sort of pullback here. As always, nothing crazy, just back into this fib zone. So between the 0.5 and the 618. And then we look for an entry long, something along these lines. And then I think the 1.36 target is still in play. So we go 1.36. This was, I'm not sure if it still is, but this was a level that I think it was MUFG or Credit Agricole. One of the institutions was looking and targeting the 1.36 level. So yeah, something to keep in mind. Gold, buy or sell. Gold is wait. Yes, looking for a retest. So let's have a look at the Fed cuts briefly, and then we'll go on to some other market things. So the cuts were interesting because we had the CME Fed Watch tool basically tell us it was going to be 50. Although I was more looking for 25, I actually positioned myself in the markets for 50. So what I'm going to do is actually show you some positions. So you can see I took a short on the dollar yen right here, hit take profit. We also had a long on the S&P. So I took a long position right here, and this one hit take profits as well. So we positioned ourselves in a way that 50 would be very profitable and very beneficial for us. And the reason is because obviously The CME FedWatch tool, as I said, was the higher probability was in favor for 50. One of the other traders at Elite Traders also had the idea of 50, and he is much more experienced in terms of the economics than I am. So I was willing to position myself in that way. So that did happen. So we've got 50. The next thing going forwards is, are we getting another rate cut? And the answer is likely, but we don't know. We didn't really have any signals. It's a case of what it's been for a while now. It's very data dependent. Although Powell didn't sound dovish, it wasn't a speech where market participants are panicking and saying, oh my God, we need to sell the dollar. It's more a case of, okay, well, it's likely that we will get another rate cut in December, but we don't have any evidence for that yet. The data isn't there yet. So it'll be interesting to see how NFP comes out, and obviously CPI going forwards. That will help give us some direction. But for now, I am still positioning for bearish dollar.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
So we're starting with the euro and US dollar. We did have some major news yesterday, at least my time. So it was the Fed interest rate decision. And as you can see, the previous one was 5.5, the forecast was 5.25, and the actual was 5. So it was even lower than the forecast. And the initial result, if we go to the DXY, you can see, where was it, right here? The initial result was pretty bearish, so the dollar was kind of losing strength on the initial news, but then gained strength back up. So if you follow the general methodology is the dollar basically loses strength, I believe. Let me check that. So yeah, basically the general methodology, if you put it in the internet, so interest rates, dollar strength. And it says when the Federal Reserve increases the federal funds rate, it typically increases the interest rates throughout the economy, which tends to make the dollar stronger. So that is what is generally accepted or expected. But basically what happened here is some pretty messy price action. So the initial result was kind of a drop, but then we went up. And that basically translated into every single currency pair, at least the ones that are connected to the dollar. It is this candle right here, and you have the pound and US dollar. It was a pretty bullish move at the beginning. So yeah, and I'm also only analyzing the 1 hour chart for my currency pairs because that is the only thing I'm trading. And I do not usually look at news, okay? So I base my analysis, my execution of the trades only on what I can see on the charts, so only on the technicals of the charts. Lauda, what's up? Zav, do you think the US economy is soft landed? Again, my fundamental knowledge is not that good. I'm still kind of learning it, getting into it. So I'm not the right guy to ask. Basically, my technicals are better than my fundamentals. Samart says, I am in USD CAD shorts after 4 hour fake out back into range. Please share your analysis. Sure. Then United says GJ. Okay, so we have USD CAD, we have GJ so far. We'll definitely cover those. But I first just want to give a general consensus on, let's say, the main dollar pair, which for me is the Euro US dollar, and let's say the main JPY pair, which for me is the Euro and Japanese yen. So just an analysis here on this 1 hour chart, I can see a flat range, to be honest. They haven't taken any trades. I was looking for some buy setups here in the price action, all right? But nothing high probability happened. So we were just pretty flat and corrective in this area. And now we are also producing a lot of volatility, especially after that news, right? lots of volatility right here. So I don't have this currency pair on the watch list, and I'm looking for just a large push up or just a large push down. Okay, so very simple. I'm a trend trader. I do have some range bound entries, but I prefer to take trending entries, to be honest. So just looking for momentum up or momentum down. And to be honest, here I'm expecting a larger and a wider range, right? So something like this is what I'm expecting on the euro and the US dollar. So that's it for EU. Not moving anywhere. EJ is moving up, so it is moving up, but it is not that impulsive, right? I'm not seeing a lot of impulsive price action. So Shimeri says euro US dollar sad face. Yeah, a bit of a sad face. I would have liked to have seen a nice trend start for the news candle to spark a nice big trend, because we love trends. The only thing we don't like is when the price stagnates like this and doesn't do anything. But unfortunately, this time it could not happen. EJ, again, moving up. I'm seeing some momentum in these legs. For example, here as well on this 1 hour chart. But then it's not that impulsive. So when I say I want to see an impulsive trend, I can give you a good example. For example, here. So this is a very impulsive downtrend. Okay, lots of weakness, lots of major bearish price action, lots of big red candles. Okay, so that is what I would look for. And here we're kind of seeing the price break the highs, retrace, here break the high, retrace. So yeah, not seeing a lot of strength, unfortunately, in this price action. But my bias is for this to possibly continue up. So if we can get a large impulse up like this and then a nice buy setup, I will be interested to look for longs. So I'm not going to put this pair on the watch list just yet because it's not looking that clean. But my forecast, the probabilities are telling me that if this goes up, that we can look for buys.
In terms of the yen pairs, which is where my focus is, I'm looking for a lot more downside on them. I think Swiss yen is still my favorite out of the yen pairs, because I'm looking for another daily swing high. So we had a swing low there, swing high over there, lovely move to the downside, creating some new lows. Now I'm looking for that next lower high. This is my first area of interest, but essentially, as long as we don't break above the high here, I'm looking for shorts, and I'm looking for us to come right back to the low. And I do have some extended targets, which I will look to target essentially. So very bearish on the yen pairs. At the moment, they're still pretty bullish. So there's no entry for me just yet. Swiss yen is pushing up pretty hard. The Aussie yen as well. Dollar yen to an extent. Euro yen is pretty bullish. New Zealand yen, pound, CAD yen, they're all looking pretty bullish. So they're not ready to be shorted yet, but I definitely do have my eye on it. Guys, don't trade smaller time frames. Yeah, I mean, I'm not a big fan of smaller time frames either. I like kind of hourly, 4 hour and above. That's kind of where I spend most of my time. So, and recently I'm now starting to focus more on the H4 and above. So I'm not the biggest fan of smaller time frames, but yeah, there are opportunities in the small time frames that people do take advantage of, but I'm not one of them. Pound Aussie leak we can take a look at. Definitely pound Aussie was pretty bullish last time I saw, but it looks like that has kind of depleted a little bit. Had a brief spike to the upside. I think that's off the back of the pound interest rate decision this morning. But it looks like price has failed to sustain that momentum a little bit. We've pushed back down. For pound Aussie, I was looking for a lot of upside this week if we could hold this level here at 1.95. Has proven to be sturdy resistance on the daily chart once, a couple times over there briefly as well. I was looking to see if we could hold this as support and then continue to the upside back to the high at 1.993. That hasn't happened this week. We've broken underneath, so I just expect price to now move into the next big level on the daily chart, which is around 1.93250. So big level here on the daily chart. You can see massive resistance there as well, and was briefly support not long ago. So I do think pound Aussie is going to be attracted towards that level there around 1.9325. So I would be bearish on pound Aussie. I do think more downside to be had. I think in terms of entries, maybe you might have missed the boat. The ship is already sailed. Unless price is kind enough to come back and retest the level again, then that possibly could be a nice opportunity to short it. But we had that retest yesterday with this rejection here. So it looks like price might already be on its way. But if it does come up again, there could be some nice shorts intraday. It kind of stops above the high and look and see if you can target that low. Because we've broken through one level, price has got a good chance of getting to the next one. So that's kind of what I'll be looking at for pound Aussie.
So on Nasdaq, we have a very nice structure, by the way. So the market was around this level. Let me remove my notification there. So what we had yesterday, it was very nice, but the market actually did not really move the way we wanted at the start of the news. So we had a proper resistance and this proper support. Then the market tried to break out there, and few minutes later, or let's say a few hours later, the market reversed, touched our support. Then after that, until today, we started to see the market trying to reverse. And to me, I can say, yeah, that's good. That's good. But it seems like the market was not really impressed that much. We know that mostly we get NFPs, CPIs, which moves very crazy. But FOMC was not really that much. But today we saw some very nice reversals there, and the market started to go to the upside. I thought maybe once the market opens here, I was going to see a proper push to the upside, but it seems like the market is going to reverse. And if the market is going to reverse here, let me take this one out there. If the market is going to reverse, this is going to be an area that we are going to actually focus at. You can see this level. It's where the market was creating these resistance levels. So maybe the market will touch this level before going higher, or the market has to create something like a resistance that we can easily identify before we look for some proper buys. Do you see that? But beside what we have now, if we can just focus on the fundamentals that we got yesterday, I can easily say, yes, the market will continue going even higher. We are on a proper uptrend structures. You see, we are on a proper uptrend structure. But what I know is, even though we are on a proper uptrend structure, one way or another, the market will have to reverse along the way. But at the end of the day, the market will slowly continue to go to the upside. And I'm expecting to look for that buy. So I think we're going to have some very new highs. We're going to get some very new highs along the way. So I think something like that will actually work very nice. I think we are going to go back where we were. I think it was around July. I think to 20,800 there, or 20,700 something. So I think we're going to go back around that level. I think it's going to be easier. It might not really be today, maybe tomorrow, or maybe next week, but I think we are going to go back there. I hope that makes sense. So let me check the other one. Cedric, thanks, man. Existing home sales in 7 minutes. Okay, thanks for that. So US 30. Okay, let's go on US 30. US 30. Okay, US 30. So on US 30, guys, I think let me just show you this on a daily time frame so that you can see what's really happening here. The overall structure, it is still, you can see that we are coming from this aggressive bullish move. We're still on that. You can see the market is still going higher, but along the way the market has to do what? The market has to reverse. So regardless of fundamentals, one way or another, the market will reverse. Why is the market reversing even though we have some very good news? Because sometimes the market goes to a point where it's quite high, and for investors those areas are very good for profit taking. So investors will be taking some profit, and it will force the market to actually sell if you're talking about US30 and Nasdaq, right? So on this daily time frame, we can see that we had this resistance area there. The market just broke out. This was a quite stronger resistance. And it means that after this area, we expect the market to continue very nice. I think you can easily see that we are continuing with that nice uptrend structure. So if we can go on 4 hours time frame, it's just a continuation of what we saw on a daily time frame. So this is what we have. You can see that the market broke. They were quite big. It might seem like a smaller structures, but let me try to make them visible nicely so that we can call a resistance. The market is struggling to break that. I think this web thing, it's quite a bit slower. I think, I don't know if maybe my resolution is quite high, but I hope maybe on your side everything is clean. So on USDT here, we had this breakout. The market broke out, started to struggle here. We can see the market was consolidating. So we have some areas like here, the market is struggling to break out of that. So should you buy? Because we're saying everything's fine. The rates are lower for now. Yeah, it depends. Even if maybe the rates are lower, wait for the structure, wait for the market to break out of that resistance before you jump in. Or maybe wait for the market to reverse a little bit. Maybe the market might end up touching this level again before we go higher. You see, why? Because now these are the new areas or new zones where the market is trying to test along the way. Yes, the market is positive, but sometimes it's going to be way too easier for the market to reverse because everyone is just enjoying the profits. Once they cut their profits, the market will even sell, even though everything is quite positive. We've been talking about rate cuts and we like that, but if the market is way too higher, we can call that overbought. We tend to wait because remember, we have to buy low. We have to buy when the market is lower and we have to sell when the market is higher. So which means, yeah, don't expect some crazy moves here. So people, they will just try to go slower until we get a nice reversal before we see a proper push. But once the market breaks this resistance, it's also a very good area for us to look for that buy.
So I guess if price is up to 580, if price is down to 560, or if price goes absolutely nowhere, what's the net result of the trades you just threw out there? Because it sounds like a lot of trading for what happens. You know, if price is here, what do your trades do? If price is here, what do your trades do?
So it would probably be a loss if price didn't move, because I don't think you could collect enough premium to, you know, outprice what you spent on the debit spread, especially if it's 10 points wide. You're probably going to pay like $4 or $5 for that.
Okay.
So it might be a net loss. But okay, one more thing added to the idea. What if you had out of the money puts as well? So if things, oh yeah, but if price didn't
move, taking for this scenario, how many trades are we taking?
40.
40. Okay.
No, I don't know. I'm just trying to workshop some ideas.
No, I get it, dude. I'm just, and right now it's like part of my brain is like, I don't need to overthink this. It's like the portfolio's up. I should be happy. I don't want to over hedge and be overly bearish, because all those are is like little paper cuts when the market just doesn't do anything. If the market, look, the market's at all-time highs, there's momentum. Everyone's all excited about these cuts. Look, triple witching is legit tomorrow, and maybe it matters. I mean, typically triple witching is about pinning prices because there's so much order flow to get to certain levels. I don't know what that price is. Obviously, like, we blew the highs up today, and we're 1.5 to 2.5% higher on the S&P and the Nasdaq. So clearly, there's no pin price at all-time highs. But I gotta wonder. It's like, I just wouldn't be surprised if this little move to the upside. And triple witching might mean squat tomorrow, but what does matter is maybe the end of the month. And if we're up here at the highs, just like we were with August highs, maybe October starts off on a sour note. I don't know, dude. But I think that broadening patterns are really, really great to mess with everybody, because this gets traders so excited to the upside, and everyone just dumps in here, and all of a sudden the market's like, bye-bye. And it just goes back down, and it shakes all them out, and everyone wastes money at these highs. And like I said, I'm not saying that we have to crash, and I don't think that necessarily we will, but I don't think that a post-Fed gap of 2 to 3% is going to have much continuation to the upside outside of, look, I know 580 was a projected target for a lot of, macros out there and investment banks, and all they did this entire year was raise. Do you know where the initial forecasts were this year when we started the year? Investment banks for the S&P
No.
were calling for, let me see when we started the year.
Was it
So-
6,000?
No. January 2024, I think projections were 4,800 to 5,000 were the projections to start the year. Nobody expected to blow through those levels, and so it adjusted from 5,100 to 5,200 to 5,300 to 5,400. All they do is they're like, we're just going to keep moving our targets up. And now it's around 5,600 to 5,800, and probably you're going to see 6,000 if we just keep going higher. It's like they have the ability just to move their targets. If you're trading that crap, it doesn't help. So I'm just like, who knows? But I don't love how we're getting. I mean, look at we pull back in April, we shrug it off. We pull back in August, we shrug it off. We pull back in September, we shrug it off. But I just wonder, I think this, man, there's a couple spots, rather than me saying oh, it's going to be a broadening pattern, just connect the dots.
The dovish side of the trade triggers that I had projected for yesterday was the 50 basis point cut. The unemployment rate was pretty close to triggering. And then the monetary policy notes were sort of in line with what we were looking at on the dovish side. This is, if you guys remember yesterday, if you were here on the show yesterday, I talked about this dovish reaction. This potential scenario was likely going to do an initial sell-off followed by a rally. Word for word, in the replay from yesterday's live episode, you can go back and play it. This is exactly what I was expecting, and it's exactly how we traded it in my private group. This initial drop happened. I was a little hesitant to try to start getting involved in this up leg because I didn't have exactly what I wanted, which would have been the 2024 and 2025 dot plots showing a bit more of an aggressive approach from the Feds. Because I didn't get that, I was a little hesitant, but I still ended up grabbing a yen trade. It was a quick sell scalp off of this initial push yesterday. So let's drop down to the 5 second, because I'm a maniac, and that's how I trade. Actually got in right here, grabbed this little position. Price popped up, fell back down, popped up, was down here. When we did a tap here at this area where price had reacted from before, tap twice, tap 3 times, failed all 3 times, did a nice little push, tried to recover, failed, got in right about here, stops above the structure, and got out here at these lows. A real quick trade, and I ended up walking away. I kind of came back later and I saw this setting up and was about this close to taking a position, but I liked the trade I got here. I felt good about it, and so I didn't end up selling out of this zone. I wish I had, because obviously that was the real move for yesterday afternoon. But that trade behind now, my anticipation, someone asked anything on yen, Nick, anything on yen? If you had a question about that yesterday, please remind me of what that was, because my stance remains the same, that I would love to see yen come down to here. And if we switch over to USD/JPY, I'll show you what that would look like on this chart for the Forex traders. That is going to look like selling out of this 151 to 152 range. So is it going to get there? I don't know. Am I going to try to ride technically UJ up? I'm just going to be riding Japanese yen futures down. Yes, absolutely. I like what happened with the 50 basis point cut and the Doxy reaction. I hope to see continued sustained upwards movement out of UJ, out of the dollar, I should say.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.